Gold prices are witnessing a sharp uptick driven primarily by unstable geopolitical events. Many experts are saying that gold has regained its status as a safe haven asset. I didn't know it lost it. Historically, the Federal Reserve's tight monetary policy has shaped a pessimistic outlook on gold. This stance led to stagnant gold prices, which until recently lingered at the $1,800 and between $1,800 and $1,900 range. The Federal Reserve's policy choices largely influenced the strong dollar and increased yields. Recently, gold experienced a rapid surge, reaching a peak not seen in the past 3 months. After bottoming out nearly at $1,830 in early October, before the Israel-Hamas conflict, it's now close to $2,000, briefly touching on intraday trade of 2009. Such a price hasn't been observed since mid-July. Powell's remarks may have something to do with it. In a recent discussion with the Economic Club of New York, Powell highlighted that current inflation rates are too elevated. He mentioned that several months of positive data are just the start of the journey to achieve the desired 2% inflation. However, he cautioned that continued growth above the usual trend or a lack of relaxation in the labor market might jeopardize the effort to control inflation and potentially lead to stricter monetary policies. Brian London, Gold Newsletter's editor, noted to MarketWatch that Powell's speech seemed to balance perspective for both optimistic and pessimistic investors. While gold investors perceived a possibility of the Fed retaining the current rates unless there's a significant inflation surge, Powell's emphasis on a potential risk unnerved some equity and bond investors. Through it all, investors still run to gold. Amidst the turbulence, the demand for gold as a protective asset is surging again, especially considering the current global uncertainties like Ukraine and the Middle East conflicts, tensions with China, and a polarized Congress. Dr. Sandra Close from the Cyberton Associates stressed the recurring pattern of people turning to gold during times of international unrest. Gold has even reached record highs in some currencies recently, especially the Australian dollar. London said that when gold advances amidst interest rate hikes, it indicates a crucial market shift, which is fundamentally favorable for gold. Philip Streibel of Blue Line Futures observed that gold surpassing $2,000 an ounce is remarkable but expected, considering the prevailing negative mood. Gold, after all, has been undervalued for way too long. Trade Nation's David Morrison emphasized gold's traditional role during crisis, noting its recent breakthroughs past significant resistance levels. With the Federal Reserve signaling its intention to keep interest rates steady, gold's rally is even more newsworthy. Gold's perspective peak. Larry Leopard of Equity Management Associates predicts a bright future for gold prices. Even if geopolitical tensions relax, he believes gold will touch $2,500 an ounce after breaching $2,100. Leopard said that once gold surpasses $2,100, its next record peak might be $2,500 or even $3,000. Even in the most optimistic scenario with ongoing conflicts, our economic and monetary situation remains challenging. It is important to note that even at $2,500, gold still might be undervalued, especially considering the massive acquisition of countries like China and Russia. As more countries move away from the dollar, geopolitical tensions rise and the supply of gold depletes. Don't be surprised if we even see $5,000 an ounce sooner than expected. If you want to benefit from this possible rise, get your gold now. Call us for a no-pressure talk, a consultation, 877-646-5347. That's 877-646-5347. You can also go to our website, noblegoldinvestments.com, if you just want to get a free guide.